So let's talk about balance sheet strategies for tax effectiveness in an increasing tax environment, maybe even a punitive tax environment. Maybe there's no current need for growth capital in the business. There's no shareholders are looking for liquidity. You've heard about this ESOP concept, but you're not really sure about it. You know that somehow it blesses the employees and there's significant tax benefits from it. So I'm going to show you a pretty unique take on an ESOP transaction that you can do basically with free money that the government gives you by virtue of a tax break. Blesses the employees, and I think you're going to find this very interesting. So let's start with the corporation up here and the ESOP down here. You, the shareholder, over here. This is called a pre-funding transaction. So the IRS will allow you to establish an ESOP this year and contribute 25% of your annual payroll expense tax deductibly into this retirement plan every year for as many as 5 years. So literally money that would be flushed away in taxes, you can keep in your enterprise by contributing to this ESOP plan. And so let's just assume, you're an $8 million annual payroll company. That means $2 million a year can be kept rather than taxed away by contributing to this ESOP plan. You do that for 5 years. You don't have to, but you can. That's $10 million. And so there's $10 million of cash in here available to buy your company's stock. Who's going to sell the stock to the ESOP? Yes, it could be shareholders that are looking for liquidity. They sell their stock to the ESOP. But for this illustration, let's assume that you wanted to use the money for corporate reasons, growth. So you've plowed $10 million of cash, or some $1 million of cash, into the ESOP through pre-funding. Within a 5-year period of time, you have to buy stock. The ESOP does. So the ESOP buys, with that $10 million, $10 million worth of stock, or $2 million, or whatever. That way, the cash, again, that was otherwise taxed away is kept by virtue of being contributed to the ESOP. It's then used to buy newly issued shares that the corporation issues, sells to the ESOP, and now you have $10 million upstreamed to the balance sheet to be used for whatever purposes the board decides. Working capital, CapEx, acquisitions, that money can go out in shareholder distributions, dividends, whatever the board decides makes the most amount of sense. That is a way where the employees, let's assume that this $10 million is represented, 5 or 10% of the company's stock. Now the employees are vesting into 5 or 10% of the company's stock for free. It costs them nothing. They don't own the stock. They don't vote the stock. They can't sell the stock when they want to. It doesn't change the operations of the business at all. You are retaining control of the board and therefore retaining control of the business forever. You could even put 1% of your stock into this ESOP, and you're going to get a permanent tax shield of 25% of your annual payroll expense, $2 million in our little example, every year forever. So permanent tax shield, blessing the employees, a mechanism for shareholder liquidity when they want it, and overarching all of this, your board gets to control, even if the ESOP owns 100% of the stock at some point, your board gets to control the corporation forever, perpetuating the independence, the culture, and the ministry impact and outcomes of the business forever. This is something that everybody should take a look at, because literally it could be done with effectively free money from Congress.